Thanks so much for tuning in to this earnings conversation with the management of GMM Pfaudler. Tarak Patel Johnson talk about how the quarter went by, how the year of integration, the start of the year of integration, if you will, has been, and how does he expect FY20 to be like, because that's the bigger picture, right? Tarak, so good having you. Thanks so much for joining in. I hope all is safe.
Thanks, Niraj. Nice to be back again. All good with me. I hope things are well with you as well.
Likewise, Tarak, all safe thus far. So can you tell us a bit about how the quarter was by? Because multiple things happened, right? There was this integration that you did. We got hit by the second wave. But as we saw in the last year as well, the first wave did not impact you as badly as it had impacted some of the other businesses, because your businesses are critical per se. So can you put all of this into perspective?
Sure. So let me start off by giving you an update on the GMM Pfaudler standalone performance. So like you mentioned, even though we had a so slow start to the year, April, there was a lockdown of last year. And in spite of that, we made up for the lost ground. We finished the year with a year-on-year growth of about 24%. We closed the year at about 640 crores versus something around 516 crores the previous year. Our profitability also increased significantly, about 55%. The EBITDA was closer to about 150 crores versus 99 crores last year. So all in all, a very good performance for us. We're very, very happy. The business has shown resilience, and the hard work of our employees is really paying off. On top of that, we also added 2 months of consolidation to the Pfaudler international business. About 255 crores was added to our overall business, which kind of helped us cross the 1,000 crore milestone. Going forward, we believe now from April onwards, we will be consolidating Pfaudler every quarter, so there'll be a full consolidation. Pfaudler also has done quite well internationally. There has been some traction when it comes to investments in both the Americas and in Europe. So overall, we're very pleased. And I think the biggest and the most heartening thing for us is that the backlog for both India as well as international business remains very strong. So the visibility is there. And as we start focusing now on the synergies and the integration, I do believe that we will be, making the guidance that we've already been given, if not performing slightly better than that as well.
Fill us in on the acquisition. How well has that performed? Because you've given in the business update, but would love to hear from you. Part one of my question is that. Part two, are there operational pressures because of rising costs, etc.? Or are these digestible?
No, so the acquisition has kind of done quite well. We've been very pleased with the way the business has performed. Germany is doing quite well. There's a positive turnaround there. China as well. We relocated to a new facility. The Americas, especially South America, is showing a lot of improvement. So all in all, the international business looks very promising. Like I mentioned to you last time when we were shown, Niraj, we have 3 areas that we're focusing on. One is looking to move some of the production to India, so we have a much lower cost structure when it comes to fabrication of the steel bodies. We look to do that here and sell that across the global geographies of Pfaudler. We also are looking at improving and implementing some of the manufacturing processes around the world. So I think something that we've done quite well in India will now be kind of used to kind of improve the manufacturing operations in China, Germany, and the US. And then lastly, we kind of want to package everything together. So we have many product lines. We have a very vast portfolio of products. So if we can kind of package things together, we can definitely increase customer wallet spend, and that's something we're aiming to do.
What about operational pressures? Almost every single industry which uses commodities as an input in some form or the other is well, for lack of a better word, term crying foul. What's your sense? How bad is the pressure, or is it already showing some signs of easing?
So yes, our main raw material is steel, and steel prices have increased significantly, especially here in India. But globally, like I mentioned to you, none of the factories have shut down. The order book remains strong, so the operating pressures internationally are not significant. And in India also, even though there has been a steep increase in steel prices, we've been able to pass that on to our customers. So that's something that has worked quite well. But otherwise, I don't see any operating pressures that would kind of change the guidance or the outcome of the business.
And is it easier for you to pass it on because you are the unequivocal leader?
I mean, yes. So I think most of our customers do understand steel prices because not only do they buy glass line reactors, they buy stainless steel, a lot of metal when it comes to setting up new facilities. So they always price the metal prices into the final budget. So that's something that's quite easy. And like you rightly said, we are the market leaders, and once we go ahead and price our increases in, everybody else also tends to follow.
Tarak, what about business update? It was only end March, beginning April, if you will, that we got hit really badly with the second wave. Have your operations across manufacturing facilities, acquired facilities, etc., been impacted majorly, or have you been able to kind of tide through? What I'm essentially trying to get it is whether Q1 will show a marked impact of the lockdowns/disruption or no, not quite.
So we didn't face any significant issues. There were, obviously shortages around oxygen, and being, we used the oxygen to cut the carbon steel, but we were very quick to move into plasma cutting and things like that. So I don't expect any significant issues. But I think one thing to highlight, Niraj, is that in spite of the pandemic, the global pandemic, we did 3 transformative acquisitions last year, which completely will change the way this company looks like in the future. We started off with acquiring one of our competitors in Hyderabad, and then we obviously bought the Pfaudler international business in August, and then finally in March this year we acquired a manufacturing facility in Ahmedabad through the liquidation. And so these 3 facilities, when they start ramping up and they kicking in, so our Ahmedabad facility already started on May 24th. Hyderabad is up and running, and now with international business consolidating, we do see significant improvements both in terms of revenue and profitability.
And as I understand, Tarak, that across all facilities almost, you have planned capacity expansions as well. My question is it a factor of upcoming demand that you foresee because of which you're doing this? Are these capacity expansions large in themselves, or are these kind of a broad brush improvement on what your capacities would be? And therefore, is this also keeping in mind what could come ahead, or do you need to do this only to serve the existing backlog of orders that you already have?
Right. So I think it's a combination of, there is definitely a demand here in India. We do see demand, and that backlog currently is about 7 to 8 months. In an ideal situation, we will try and bring it down to 5 to 6 months. So definitely would like to expand. But like I just mentioned to you, this new Ahmedabad facility really helps us significantly because we now have the ability to move one business, which is the heavy engineering business, completely to Ahmedabad, which will free up a lot of capacity at our Gujarat, the current facility, to expand the glass line business. And then obviously Hyderabad itself also will see some expansions, but we are expanding across all our business lines. And what's showing a lot of traction and improvement is our heavy engineering business. We recently received very large orders from India's the biggest EPC companies. So that is something that gives us a very strong visibility going forward.
Okay, I was about to ask you about which end user industries are actually showing the biggest traction. Is it chemicals or pharma? You were saying India EPC business is doing that. What about the other end user industries? Which is showing most traction?
So chemical is still very strong. We do expect chemical to continue investing. Pharma is picking up as well, and hopefully with these PLI schemes and Make in India programs, I think pharmaceutical will definitely see a lot of investment. And like I said, the demand is there. We don't see any kind of trends which shows us that inquiries are going down or slowing down. So we are quite positive, and we believe that the next couple of years here in India, both the chemical and pharma sectors, will be quite strong.
Last couple of questions. One is on the next year, one is strategy next year, and one is for the earlier guided targets. So firstly, when you did this acquisition, Tarak, in one of the interviews with us, you had mentioned that you will be using the India facilities to serve Pfaudler's Asia Pacific clients, Southeast Asia in a big way. Are you already acting upon it? Is it showing good promise? Can you talk a bit about that?
Yes, so we now have a dedicated person based out of Singapore. Southeast Asia was a market that Pfaudler was not very strong in. So now we are controlling it directly from India. We've already seen some good results there. We have large orders coming in from Singapore. What we've also seen is the Pfaudler network using our GMM Pfaudler Indian-made products to enter some price-sensitive markets. So that's been a very good breakthrough for us. We've seen specific markets in Europe where Pfaudler did not have a presence. They've been able to sell GMM Pfaudler-made equipment. We are also kind of working with Pfaudler to build components here in India to reduce their costs. That's ongoing as well. So all these projects are now running. We have work streams up and running. We have regular reviews with project management as well as steering committee. So all these projects will be ongoing, and we expect them to start bearing fruit very shortly.
Okay, Tarak, one last question on the numbers. What is done is done. Now, please correct me if I'm wrong, but you ended FY21 with numbers, reported numbers of 1,000 crores top line and 64 crores bottom line. Would that be the correct number? Yes.
Yeah, I think you're right. Yes, I think the numbers look correct. I mean, I'm not sure, I don't have the numbers in front of me, but just a couple of points to add here. One is that obviously, like I mentioned earlier, only 2 months of the Pfaudler revenues have been consolidated, which is February and March. From April onwards, it will be a full consolidation. The other thing to also note are there are 2 exceptional items here, which are only accounting and have no effect on cash. One is the purchase price allocation of about 45 crores, and there is also a one-time acquisition-related expenses of close to 33 crores. So these are accounting entries as per IFRS 3, which we have to account for, but they have no effect on the cash flows, and they don't have any effect on the business per se.
Okay, fair call. So let's assume that maybe people can extrapolate what happened in Feb and March for the year and then add some growth. But I was just trying to come to the point wherein when you announce this large acquisition, which makes you the global giant that you are in this space that you are in, you had spoken about numbers closer to 2,800 crores, if I'm not wrong, on the guidance by you on the top line and proportionate bottom line numbers, which came as per our calculations to about anywhere between 250 to 300 crores ballpark bottom line numbers. Now, with the numbers that you posted, reported numbers FY21, would you believe you are on track to meet better those numbers by FY24? 3 years out, but still.
Yes, Niraj. So I think we are on track. If we are definitely on track, and I think we would probably look to even the performance a little bit better because the old guidance did not consider the new facility that we have in Ahmedabad. So 2,800 crores, 16% EBITDA margin by 24 is definitely doable, if not better. And we have synergies which we've not included in these numbers. So on top of that, we expect another $5 billion of synergies that we would add on top of the 16% EBITDA margin.
That's heartening to know for all your shareholders, Tarak. Keep up the good work. Thank you so much for speaking to us at BloombergQuint, and have a fabulous FY22.
You too. Take care. Nice talking to you, Niraj. Cheers.
Likewise, Tarak. Thank you. Cheers. And viewers, thanks for tuning in to this earnings conversation with the management of GMM Pfaudler.